Hello, this is George with the Harmony Trading System, and we're doing the analysis for Friday, June the 17th. And let's start with ES. And here it goes. So, what we're getting here is FOMC meeting came in. They did a dead count bounce. They could not cover the gap. We were talking about how this gap has a good potential of a cover, especially in NQ, which was stronger than ES and the rest of these instruments. And they truly failed it into the morning session. And along the way, they broke uh, target number two, which is 37.42 and a quarter in ES. And then we ended up hitting the lows at 36.37, and toward the end of the day we had a mild bounce. We are opening in Globix right now, and that open is literally, it's an inside day. The high and the low is within the high and the low of the prior day. It's going to take some work for this market to start heading back up. We may see an extension of this price action lower into lower targets. The first one is the bottom end of channel number two, which is 3,600. If we break that, we are going to start heading toward 3,500, and ultimately 3428.5 is target number three in this sequence. That sequence started with a short and an inception trade at 41.45. We pulled back, established channel number two, consolidated for a while, and then the market sold off in a mean way, a persistent way. So these are the downward pressure targets that we have coming in. Now, if you look inside the internals of the day, 3706, 3719, and 3742. All these levels, if we test positive in and around them tomorrow on a bounce, that can build up a base and a reversal pattern that can get us all the way to 37, basically 3800. Then we can start chewing through these prices into the 3884, and then we cover that gap that we see right here. The probability of that event happening is really low. I'm more of a better on the downside than the upside. If I see any rally up in these levels, I'm looking for a short pattern on Rinco bars to basically go and reload on the short side. So that is what we're seeing here. And if we go back in history, I mean, we could see that the market did a two-stair step here, one, and this is the second one downward. Okay, I mean, to get all the way down to 34.28 is going to be a tough thing for the market to take, be honest with you. And it's going to be very impactful across the board on this. So let's take a look at NASDAQ. When you're looking at ES, you pretty much are, we're talking in the same way about NASDAQ. And it was a lot stronger. And that gap, and that's what I was saying in the prior video, that the market could on a bounce go and start covering that. Nasdaq was the most probable instrument that could have done that behavior and started to chew through the 12,000 into the 168. However, I mean, the market just succumbed under the pressure, could not break that high of Globex, and ended up selling off in a major way. And toward the end of the day, bounced off that 11,000 uh, 25. And right now we are in an inside day similar to ES, where the high and the low of today is within the high and the low of the prior day. And we're going to see uh, a potentially two-sided market, a little bit of a bounce behavior. But the reality is this market has a bit more selling pressure ahead of it. And if we start breaking that low of 11,000, I wouldn't be surprised if we come and test 10,500, and then we'll go all the way down to target number three in this sequence, which is 10,263. That's target number three. Now, target number four and target number five, I don't want to even mention these numbers because those are like Armageddon numbers. We don't want to see anything that looks like 64.56 or 39.18. Okay, so let's get busy now. Couple of things that I would see on the long side: if we break 325 and then we break the 519 tomorrow. If that happens, we may be in a similar pattern uh, as of this behavior. So the market will be oscillating and consolidating because it's not quite ready to make a bigger move into target number three. In that behavior, if it happens, I am going to be more interested in going short than going long. Okay, so those rallies are I'm going to short into them, and it's going to all depend on how the 200 and the 100 NT wrinkle behave. But ultimately, uh, the bigger targets that we have are short target. The swing trade indicator is giving us short signals, not long signals, and that's where we have to kind of keep our focus on. But we're ready for whatever the market kind of present us with. Crude oil, we talked about this level. We talked about channel number one. We also talked about the this area right here, and you could see prior video that we did yesterday and the day before that, and it's going to clearly talk about how we see this area right here around 1617 and also around that 112 and a half, which is the middle of the range and actually the bottom end of this channel. If that holds, then we are buyers in crude, and we're looking for a run up back up to 123 as long as the 112 and a half is protected. So that has to hold, and we're going to be looking for managing risk a lot tighter on the small charts that we have, but we are more of a buyers in this instrument than shorts in it. Now, a lot of people could look at this 123 and say, okay, well, they made a double top. They tested it one, two, three, four times and backed off of it. Well, the whole instrument is really, truly extended. We hit these highs and we're backing off of it. But that's just, they're giving the impression of a double top. If you compare that high to this high, ultimately this market needs to hold 112 and a half, and if it does in the next couple of days into next week, we should start migrating back up to target number two. Target number three is 160, well, excuse me, 133.44. Then you could go to 164.73. Probability of us doing that is really low, and a lot of it really truly depends on how we handle this candle right now. Okay, now let's take a look at gold. That is a meat grinder, be honest with you. I mean, such a meat grinder of an instrument. We are hitting the top end of the channel, and actually this channel needs to be adjusted to right here. So as long as we continue to trade in and around the 1860 and continue to trade under that high, we should be looking for a reversal candle that will cover all the gains that we had today into back to target number two, which is 1826.2. So as long as we do not violate the 1882, this market is just making lower highs and is consolidating in a very tight, not even a tight range. That's a wide range, and the probability of a sell-off into target number two is high. If we test very well here, then target number three, which is 1765.3, should be a target for us. Now, the question that I always think in my head is like, in an environment that is very defensive and all the indices are selling off in a significant way, you would think gold as a commodity, as a safe haven, should be trading a lot stronger, but it's not. And the technicals, the price action is just telling us all what we need to know. These highs of 1880 and 81 to 1896 are going to be here with us for some time. And as long as we protect that zone, then lower prices is what's in our future right now. So as far as the news, I mean, we've been talking about the news, and we have Mr. Powell tomorrow talking, and you know how every time he, excuse me, open his big mouth, the market reacts. But that is 7:45, and that's going to be early in the morning. He's going to start talking, and the market is going to start moving, and that's going to be a big deal. And we will be there to watch it and look for it. But after that, really not much going on. Industrial production, CB leading index, all these other instruments are an issue that we have to, not a big news that we need to be paying attention to. All right. So that's where we at. That's what we see coming up in the market right now. And just be safe out there. Always trade with stops. Precision is a decision, and always trade in harmony. And we will see you on the next one.